So please, warm applause for our panelists. So, yeah. On the blue chairs. On the blue chairs.
We're on the blue.
On the blue chairs.
So
I have the gray chair.
Oh, okay.
That's even work out.
Yeah, so and again, they will introduce themselves, but it's meant to be as a discussion. So if at any time you have a question, something you think that's really true, and you want to add something, or that's not true, and you want to say something different, like let's keep it as a discussion. We will have time for Q&A, but yeah, let's make it live. So maybe each of us can introduce yourself, even like if you spoke this morning. Okay. But Antonio, we don't know you yet, so please let's go in this order. So Mark, can you?
Hi everyone. So I'm Mark Boyd. I'm an API industry writer and analyst, working at Platformable, helping out with APIdays. And I've written quite a bit about business models and how they're impacted by APIs and the opportunities that will create.
You have a mic? Okay, it's working. So I'm Antonio, so thank you for having me, and I'm looking forward for the conversation. So I'm in charge within BNP Paribas, especially on the retail business, what we call distribution. So it goes from everything that's linked with customer acquisition, sales, touch points, and actually helping the different banks of BNP Paribas from San Francisco to Tokyo to transform. So APIs is part of the process.
Yeah. And Bruno?
And Bruno, so I spoke just before. The only thing I would like to share, if you have not understood that, I'm a big fan of ecosystem integration. I think that all the technologies we are talking and sharing with you is a great opportunity for all of us. And so looking at the business opportunities and what needs to be done or how to make this happen is one of my passion. And at Axway, I'm leading the solutions for banking and financial services.
So I will just begin by the sentence I shared before. Don't think about a business model for API, but think about a API to power your business model. So you know this sentence in many of API conferences. How do you see it in the banking industry?
Yeah, so then I think thinking back to what we've heard over the last day and a half, yesterday we had a discussion with Mike Kelly, who presented in the afternoon. He was talking about coming from it by knowing your customers and your customer segments first, and from there thinking about how you're going to be able to meet those needs in a new digital environment, and from there that might then identify who you would need to partner with and who you need to and then what sort of business model would facilitate that. So I think connecting that with what Paul Rowan said yesterday morning when he was talking, he was giving an example of banks having agriculture clients. So you've got farming. If a bank looks at their customer segmentation and discovers that they've got strong links, for example, with small business farmers or with farming companies, then that might be what their starting point. Like, it's an iterative process, but that might be the starting point as far as going, okay, that's one of the customer segments that we want to continue to work with in the future. What are their needs? What are their pressures? And one of those pressures is that they're all starting to adopt more precision agriculture techniques with farm management software. And okay, then there's what sort of business models might develop up if we were partnering with farm management software to improve our loan and speed up our loan approval processes. And from out of that, then you're working towards a business model, and it's finding what APIs would support that sort of business model, rather than the API work is almost done separately as far as initially as far as the reorganising your services and data within a new sort of microservices sort of architecture. But then it comes alive, and you can really see how to put boundaries around different services and data once you're sort of thinking through that sort of business model and how to enhance customer relationships.
Yeah, okay. And you, Antonio, how this sentence resonates with your work at distribution at BNP?
In fact, I think that's part of what I was saying, that, well, normally the problem starts that everybody wants to discuss about a technical solution. And they jump right away to, should I take vendor A, B, C, and D? So you get on one side business people trying to discuss about a very technical solution, and the IT guys expected to deliver something which they're not clear about. So what we are trying to do first is to be sure what is the business value you want to generate. So, and start with that. And this is kind of tricky because banking is changing a lot. So it's not a stable period. We have to reimagine the way we serve our customers. We're going to generate profit, manage our costs. And it's very easy to jump down to, okay, let's take vendor A, and it's going to be a solution in itself, which is not. Of course, API is going to be part of the solution anyway. But if you're not really clear about the business you want to create, just say, well, I need an API. And that's in itself not a solution. So we are going over this process to be sure that we have a clear picture of what we want to do. And then we come up to discussion what is the best solution to do so. And in most cases, API makes sense, but not always. So, and if you go straight ahead on these discussions, it's like on data. So, okay, everybody wants a data lake. Yeah, that's the trendy thing to do. But if you don't do it with the right purpose, well, you're going to, for sure to fail. So there's ongoing work to be sure that we know what we want to do from the business perspective. So how this is going to bring value to our customers, be it B2C, B2B, or meet partnerships, and then where's this discussion in parallel. But it's not easy.
Can we say you start with why?
Yeah.
Yeah.
We start with the value. I mean, it's basically the problem we want to solve to our customers, what things we want to make better. Be sure we are very clear about that, and then everybody can discuss about the solution we want to implement. Sometimes it's an API, sometimes it's a process, sometimes it's something different. So it's a process to get to there and not to jump into a technical solution and not even regulation. The SPT, of course, it's enables, it pushes, but in the end, you're serving our customers. If you forget that, for sure, you have a bigger risk the solution you're going to implement is not going to deliver the value you expect.
Thank you. So Bruno, a few years ago, some vendors had this, let's say in 2000, long time ago, last century, 2008, 2009, some vendors had this, build it and they will come, right? They were pushing APIs and build it and they will come. And actually there was a wave, like 5 years of successes, but some fails too. So how today, when you talk to potential, to prospect customers or in the banking industry, how the discussion is, where's the value in the discussion? Where do you talk about how they will monetize, or what are the return on investment on an API strategy?
Okay. I would like to share one of our reference, which is, very talkative, and so I'm not disclosing anything here. I mean, 2 years ago, we were running or starting running a hackathon with internal hackathon with NAB, National Australia Bank, and what was very interesting and what we have been doing just before that with them has been to create what they call and what they trademarked NAB API. So back to one of our discussions yesterday, yes, API can become a product, and what basically they have been gaining with this is that, NAB is a 150 years old bank, okay? What they were looking for was to leverage their existing asset. It's better, so some were saying that it's better to start from scratch with the new technology, it goes quick, la 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 la. But when you have some sort of asset, it's better to leverage at least 50% of it rather than to reinvest if you can. What did they gain? They launched a branchless bank, which is UBank in Australia, which basically use what? Leverage the catalog of APIs and the core banking services that we have been layering with them in order to create this branch. At the same time, they create new services like peer-to-peer payment based on exactly the same layers and other stuff with partners and blah, blah, blah. 2 years ago, we ran the first hackathon with them. What are they saying now? They are saying that actually they are reusing almost every services, meaning that when they want to launch a new service, it costs them less than 95% of what they were spending before, meaning that they are reusing almost everything. When they want to open a new channel, it costs them less than 85% than before. And basically, from a time to market, they are gaining something where they, 2/3 of the time. So they can, from thinking of a new service and putting it on the market, there are 12 weeks. So basically now, at least the stats I have are dated from a couple of months already, but they are very happy to have 60% of their interactions they do have with their end customers through the digital strategy that's put forward.
So what you're saying for this example, monetization is internal more than external, in this case at least.
Yes and no. I mean, monetization, that's another point, very important. Monetization, I would say, comes after. You know, the first, when with our customers, the first concern they have is how are my customer or the customer of my customer are going to use the services I'm providing, or how, you know, and they are more looking of usage, what is used, what is not used, and when and where, you know, and by whom, than building a business models on top of this. When we talk about monetization, is with customers like Dun & Bradstreet, which are in the business of the data, you know, and they wanted to set up a new business leveraging online the sharing of marketing data. And this we did then in 6 months. They made a fantastic ROI. But with banks, I would say that they are more interested in better understanding where we are going, how things are, you know, used, not used, and, you know, because we are in a more uncertain world than that.
So on a cultural point of view, more for you, Antonio,
okay.
but on a cultural point of view, so how did discussion happen in BNP Paribas about, like, when you talk about APIs and potential benefits of APIs? So just one example, I was talking with an American bank about APIs and API monetization, showing great startup fintech examples, and they were telling me, are you trying to pitch me that if I open APIs on internal assets, I will make $50 million turnover, or what I say, which some startups are doing in 2 or 3 years? You say, am I risking like billions of dollars of business just for small pieces of market share of the your API business? So yeah, so I was really impressed by this answer. So how do you tackle this kind of discussion internally?
So I think the maturity is increasing a lot, in fact, and I think, you know, behind monetization, what people have in mind is value. So can I actually measure and have a tangible way to see if I'm creating value or not, be it additional revenue or cost reduction? So and we see it 2 ways. So it's already generating value internally, so to speak. You know, again, we are a large organization, so we have a lot of business lines. So we're not 150, we'll be 200 years old. So legacy has a lot of meaning for us. And we already see a lot of cases where by making companies work together better, this generates value in the sense we actually put euros or the pounds or whatever you want behind the case. So we know this. And this was kind of the starting point, you know, because, you know, revenues are uncertain, costs are there. So, and this was an easy way to get the discussion started. What we also see now is we are also doing from an ecosystem point of view. So, for instance, in some countries, so we had some partners where we did fixed pricing models. So, you know, we did a service, an interest rate, or a credit, and it was kind of preset. So, what we did was we now built an API on top of that, and we're able to generate with an e-commerce player, dynamic pricing models because of that. So again, so we see in the relation with that partner the increase of revenue, and this is expanding to other parts of the bank. So I think it would be wrong to think that banks are not there yet. There's a question of execution, because again, when you have 200 years legacy, time to pace, it's very specific to your organization, but it's not close to our own environment. We're actually engaging with our customers, and sometimes they are very large companies, sometimes it can be fintechs, and it's a co-competition, a co-creation, and sometimes we are their suppliers. So there is no boundary on that. There's kind of this wall we don't want to lose or break, is the relation with our customer in the end, whatever it be. So because that's the kind of the main driver, what we actually believe is our core value. If at one point it's better served by using an API, yeah, fine, we do it. So the conversation started with that. So can we internally generate value? And selling data, again, it's just one way of doing value. And then it quickly expanded to in the relations with our customers, and they're very diverse. Can we use the technology to create value in a different way? And again, fixed pricing versus dynamic pricing, it was a very obvious thing to do.
And always in your core business, like in your legacy core business, right?
Yeah, I mean, it's more or less the same example that Bruno said. So we have legacy systems across countries and businesses. The idea is, I mean, this thing has to be kept up and running and adapt to regulatory standards. It's mandatory, but they are not made to this new world. So the idea is to disconnect as much as possible and to decorrelate the old of the the world of the past that needs to be there and it's going to last a couple of years, and we expect some years, and what we need to do for the business of the future. And this is going to be done through APIs and microservices and a lot of different stuff. But you have to be very clear on what you want to do, and also be willing to adapt. It's quite obvious that the way we are going to generate revenues in the next 20, 30 years, it's going to be very different from today. The challenge is having the right mindset and the business vision and then the IT setup to do it and be adaptable.
Can I ask how much of the business case, so for the partner case, for example, how much of the business case do you need? So how much of it is assumptions based? Because if that's if you're forming that as a new relationship and that sort of thing, but does that get knocked down straight away because it is based on assumptions, or?
That's a great question. In fact, we have that discussion on everything. Because of course we have a very formal decision process, which is usually with a certain return on capital and so on. And when we are taking new projects, it's very uncertain. So we do a lot of assumptions. What is happening more and more is that we do kind of a mixed thing between calculations that are supposed to be very precise but based on very uncertain data. So they are flimsy at best, and then there's kind of conviction behind with the partner. Right. Do they believe this is going to generate value? Does it solve a specific business problem that we see on the market? And can you put KPIs to that can be different than the ones we actually use? And when we have these metrics into place and say, okay, we accept to take a calculated risk. Now, there's going to be in any way small compared with the scale of the bank to do the project. So it's a mixed feeling, and we are still evolving on that because we have a classical, very sequential, top-down financial process to decide on projects. And that's very fairly good when you're buying a large bank organization, for instance. When you are going to give a go or no go to a relatively small project, you cannot apply the same process. And there's a lot of experimentation around the bank also on that. We're doing different stuff on different business lines, from consumer finance to wealth management to retail to asset management. Everybody's thinking a little bit with the process to try to fine-tune it, and we share it to see if we can learn with each other.
Mark, so you write on APIs, on containers, on microservices, so about the new stack, and you write for the new stack, which is thenewstack.com, which is a media dedicated to that. So how do you, and with the report, how do you see this new stack and new technologies enabling banks to provide faster monetization models or faster products or whatever? How does it impact API business models or monetization for banks?
For banks, I think it's still really early. So I think it's the experimentation phase, and maybe internally, if there's that sort of knowledge sharing internally, that's a leadership quality that BNP Paribas has as far as how it operates. Because I'm not seeing a huge amount of that sort of business model discussion trickling up just yet, sort of thing. But across other industries, there's some similar stories. So for water utilities in the US, for example, they wanted to introduce some sensors to be able to more accurately identify where leaks in pipes across large distances occurred. They couldn't get the business model up. They couldn't get the business case for that up within their utilities company, but then they were able to show that by being able to better address the leaks, one, they were available for a government rebate, which would actually pay for the installation, and two, that the costs saved from being able to more accurately and quickly predict where the water leakages across their pipelines were occurring. Then because they were able to demonstrate that as part of the business case, then it sort of paid for itself to be able to implement that solution. So so I think some of those sorts of stories around cost reductions could be the entry point for banks to be able to argue the case for both APIs and then be able to create a pool of money that could then be spent on innovative products as well. Where I'm seeing in other industries, it's often coming from even marketing areas within a company that are pushing forward on suggesting the sorts of new products and the business models that could be developed up as far as new revenue streams from products that are more customer facing sort of thing. So even marketing's having more of an influence across other areas within business. So again, I'm not sure of the impact, whether that's a similar sort of trend that's been occurring in banking.
I could share a story which similar. I mean, again, it's the link with innovation and APIs are in that pool. So we were having a big discussion regarding social media and what we should do or not with Facebook. And we were looking for the business case. So how to demonstrate that it's actually going to pay off for itself. And then the highlight came from the most unexpected part of the company, HR. Because the guys, I'm spending a lot of money trying to recruit people. For a long time, I wanted to use Facebook as a media to test. So I'm willing to commit savings to shift part of my budget, which is usually now done in, which is now standard digital HR things, to Facebook. And we had again, it's a theoretical business case, but at least they committed to that HR is now the one being the key decision driver, but you start as a social listening project on Facebook. And that was unheard of because nobody in the bank was like, okay, are you really sure that HR is serious about that? And we're having more and more these discussions where unexpected parts of the bank come up with, but my customers have a specific business problem to solve, and this makes sense, And we have, I could go on for hours. We have tons of these things, popping up in different markets, different business lines, where they make the unexpected connection of the dots. The thing is having the ecosystem internally that allows people to make the connection.
Yeah. It comes back to, I think we heard that yesterday morning where people were talking about Conway's Law. So Conway's Law is that the way you sort of structure the organisation will determine your operational culture and your technological choices almost. So having that. Having the opportunities where someone within HR can be sitting there with someone from the technical side and say, yep, that's actually, we could make that happen. It sort of can be fleshed out. And that to me is one of the strong points about APIs, because APIs is sort of like it's an abstraction of the technology in a way that the business and the technology people can talk about what their goals are together and sort of map out what their needs are. So it brings it much closer together, which then also could be it's an innovative environment as far as trying to talk about the ideas that can come out of that.
Yeah, Bruno, I had a question about when you arrange like meeting and you discover the customers are interested in APIs. When does the why question happen? And how do you feel them already mature and aware of this why question, or when they reach you, they want a solution and they want do it right now?
I think it depends. I mean, there are two type of banks. One type, which is we feel that the API technology, generally speaking, and API management is something that will enable them to cope with new regulations, with new opportunities in terms of business that will come from their business perspective. So it's more like the IT coming to us and saying, well, obviously we have few business cases here, how can you help? So this is more from a bottom-up, I would say, perspective. And this is, I would say, still 60 to 70% of the questions that we do have. At the same time, the rest are more, okay, we have understood. So from a cultural perspective, there are a couple of customers who have understood that they need to be very drastically pushing forward, bringing not new services, but a new way to deliver service to the ecosystem, meaning that these kind of banks know that they cannot boil the ocean by themselves. In other words, they have already understood that they will not go on pushing their services or maybe even new services from their own, but needs to do this in a way where there are services from others that they can aggregate with their owns to push a more interesting and value proposition to the end customer, meaning through life situation, loans on the fly or whatever. There are so many things that we can imagine. And these are something like 30% of our customers. And then they are very well, already connected to partner ecosystem, to nailing down the onboarding stuff, like what I talked about, but not only for the customer, but also for the corporates, and how to make this happen in a way that you can manage, meaning that if there is a new partner that for any reason shall be blacklisted, you can switch off the connection like this, real-time, intraday, and not spending too much time. So providing a kind of platform technology that can help them to this is, I would say, 30%.
So I think so from what you're saying, and then thinking about Antonio's comments earlier, then one of the I think any business case that's pushing forward, or even any definition of a new business model and revenue stream, to get that across the line within a bank, you need to actually have some analysis of how this new product or service or whatever is going to also maintain your existing customer relationships. So like sometimes, yes, it might be extending to new customer streams and all the rest, but there's got to be some, it needs to be clearly stated about how the current customer base will still be served or still be maintained, rather, and not be lost to if you can't switch off a blacklisted third-party provider immediately, or you need to be able to, in exploring these new ideas, then at the same time you've also got to constantly remind other teams of management that the current customer base is secure.
Yeah, you're very right. Actually, if you look at banking, for example, banking and insurance are different in this regard. I mean, banking are more like, how to do with partners something that will better eventually deliver value to my customer. This is bank. Yeah. When you look at insurance market, it's a bit different, because insurance market has been used to go through brokers in order to sell their policies and contracts. So they're, in a way, more open to the fact that they may not own the customer and be able to go through a distribution network in order to better serve the end customer. So they are less in a position, like we heard this morning, I'm still owning my customer, and more, what is the liability I have on the data of the end customer I do have, which is very interesting. I think insurance sector and banking sector can, benefit from each other. Banking is much more advanced in terms of technology than insurance, but from a cultural perspective, I believe insurance is more ecosystem-oriented than banks.
Can I jump in again? I wanted to ask Antonio, then, does that work the other way then with fintech partners who are coming to you, who want to partner with you? Is it in their benefits to actually say how their relationship with you will further strengthen your own relationship with your customers?
That's clearly part of the conversation we have with them. In fact, and I agree with the point in insurance, and there are some parts within financial services. When you have a B2B2C model, so you have an ecosystem of our partners, for sure you have to learn to be open. But so with fintechs, normally the trade-off is, so we have reach. So we have a large customer base installed that generate revenue, we have a relation, which we build over time, and normally they have a good idea. And to be honest, it's not necessarily even the technology, because most of the times, itself, the technology is not complex. It's complex from the banking point of view to integrate, but you look at the bits and pieces of the stack itself, it's fairly trivial. But what is different is they actually, the way they build the experience, the pinpoint problem that they want to solve, and this is something that a very large organization normally is not very good at. So we are discussing with a lot of them, across all geographies, to say, well, how can you help us to some extent and better improve our customer experience, so to deliver additional services, but also how can we help them in their business, because normally all of them need a bank, for instance. So, and we're very happy to take that part of the business also. So we are trying to build, and we're doing stuff like hackathons and a lot of that stuff to create an ecosystem where we are a player. So we want to expose our services also to some of those fintechs. So it's not just one-sided. If there are criteria, a delivery service and you need insurance, or a travel service and you need to a credit, we have business lines that actually provide it as a service. So we want to be part of that. And the other way around, We want to integrate when it makes sense and with the right business model, the kind of value that they deliver. And it's very diverse within the bank. I can give you an example. So we have within the bank, the largest European car loan company called Alvar in the world. And in fact, all of the cars are connected. So we have more than 1 million already connected cars. And we are discussing with some third-party companies, saying, well, if these guys are a repair guy and they need an urgent call, we know where they are. So we can actually pinpoint who is the guy closest to you to make you a quick repair. Nobody has this other than us. So, and when we're discussing with the ecosystem and our large and small companies, it generates a lot of ideas, again, on how to create value. And it's not something that they will initially say, okay, but are you interested in doing it? Yeah. If it makes sense with the right business proposition, why not?
Are you saying that with the hackathons and the ecosystem you're building, maybe one of the next business model for banks is to invest in data, right? You talk about connected cars and everything.
Banking is all about data. When you're doing risk assessments and credit, it's about taking data that you have and trying to understand it.
Let's say more data, yeah.
But now it's because we have more data and more complex data, and you have to be smart about it. It's just it's the next version of what bankers were used to do in a different environment. But a lot of what we do was about that. When we're doing an assessment on somebody, it's on that. Can I or not, or should I do credit? And that's incredibly helpful for everybody. If you do a bad credit judgment, the whole customer base is going to pay. So if we are more efficient on that, the ecosystem and globally that's all of us is going to benefit. But it brings a lot of challenges because, again, it's you mentioned regulation on the side. Today there is not a level playing field. So because we are normally European companies and very regulated, we have more stringent controls than others. So we're not running the race with the same leeway. And that's something which is challenging for us. So you need control. You need that's obvious. But it needs to also be fair in the sense that everybody's playing the game the same way, which is not the case today.
So you see the industry in three different versions, in three different ways. I just wanted to ask a question about how today banks are breaking their some of their boundaries about thinking differently. Just an example. I think Kirsten Moyer from Gartner last year said that in 10 years, the main competitor of banks should maybe not exist today, last year, and maybe not from the banking industry. We have, I will not ask you to comment on this, but Orange, a French telco, acquired a bank, so it's going into the banking system. But in the same time, we have some banks that provide mobile phone plans to their customers, or that provide a car insurance, so they are trying to diversify their businesses. So they're trying to see different things, but how far you think, from your different perspectives, bank will do things differently? Maybe be like just infrastructure. Just do some banks will try to be AWS for identity, right? Like infrastructure providing an identity layer, and stop the banking classic business, or do banks will do something completely? Do banks will invest in mobile devices to own the mobile device and experience in mobile banking? I go really far, but this is things I've heard. So yeah, so how things are going to your side?
Yeah, thanks. I'll go first on that one, will I?
That's an easy one.
Yeah. No, I mean, I think you're right. The telco, I think, is the natural sort of first boundary cross on that in that way. I think because and you can see that already happening, say across some African nations where the banks are partnering with mobile operators because it's the mobiles who have the contact with the local communities and the local customers. So the banks are able to extend their reach or be able to provide banking services only by offering, by partnering with mobile operators and having solutions there.
But why not the bank acquiring the telco then?
Yeah, well, so then we've seen that. And that's what I mean by the boundary cross. There could well be some of that where those lines become blurred. I mean, I've even heard models around, I think we're in for a lot of those sorts of boundary crosses over the next 10 years across all sorts of industries, where when you think of the value chain that's created, then it does completely mess with our ideas of vertical industries. I'll try and think of another example.
Or Antonio, maybe you can.
I mean, again, I think that's a very tough one, and nobody has really a crystal ball. So I think There's some stuff which is clear. The physicality side of banking is going to change a lot. So there's still going to be branches for banks, and you will need to do stuff on the branches. But probably the nature of what you do is going to change a lot, and the number is going to change a lot in the countries, depending on the maturity of every market. So it's going to be more and more digital, not just in the sense of transaction-wise, but also business-wise. So to generate actually revenues in a remote way, which is, again, it's going to be fairly new for banks because we're not there yet. You're always going to need, basic, what we call today banking needs, a credit, an insurance, sort of stuff. So the way we will deliver it will be very different. Now, what we put on top is going to be very different. And we already see some new behaviors generate new financial needs. So if people travel more or they go to an Airbnb location, maybe they need insurance on the spot, which is a very specific thing. Because I want to do bungee jumping, and I want to be sure that if something happens, I can just press a button and be insured. So we believe that if you're creative, there's a lot of stuff we can do. And again, we are doing some of this stuff which is real. So that's kind of enlarging on our natural circle. The other stuff that we are doing, which is somehow outside of our comfort zone, but leveraging our assets. Again, we have a public experimentation ongoing with Carrefour, so this huge French retailer in France regarding mobile payments, mobile wallets solution, which is not a banking project, but leveraging the fact that we have a very deep customer relation knowledge, an experience how to manage a relation, and leveraging with Carrefour to see how to create a new service. So it's kind of it's an incubator within a bank. It's a very nice project, and it's completely outside what we call traditionally banking. But we assume we know how to manage our customers. We're just trying to take this know-how and plug it in a different kind of relation. So I think you'll see more of that in the next years or so.
Yeah. Looking forward to it.
Maybe a few comments. As Antonio said, we have no crystal ball. However, firstly, I would like to say that since those two last years have been the banks moving so drastically, so fast that it never happened before. And I'm very positive on that the bank industry, generally speaking, is going to move and to change. This has been drastic. When I see what they were saying, 3 years ago and what they are saying now, wow, this would never have happened before. So they are accelerating really fast. First thing. Second thing, well, I think that in the future, bank will have to and will reconcentrate on their core asset, which is around the customer data, and this needs to be really improved. And what is the liability? What they can do with this? And then around this, bank can become kind of a trusted party for end customers, not only to deliver, account management or credit and loans, all the traditional products they are delivering. They need to change that. They need to stop, bombarding us, with new offerings on credits or whatever. That sometimes it's usually not really well targeted, and it's really a waste of money for them. But more thinking of best to fit, customer life situations, and aggregating others. Or maybe simply providing their own services to the others. And I think the movement is there. If you would ask me the question last year in this same room, it was not that clear. There was not that many banks looking for entering really, with such a will to integrate and to engage better their partner ecosystem. Now this is the trend. This is, as I mentioned, we're more than 20% of our customers on that. So that's cool. Together with the increase of the reactivity of the banks, this is going to change. So two things. Firstly, focus on the core value a bank and only a bank can provide. Second, add on top of this various services that can fit various life situations. And the bank of the future will have massive personalized services to their customer, considering the various different segments and individuals. Yeah, I think this will happen.
So what are the questions I forget to ask? So now it's time for some exchange if you had some questions. So no, it's just scratching. Yeah, one question here. I'll give you the mic for the video.
Hello. Don't you think that the customer relationship management process will be outsourced actually to the ecosystem rather than having that in the bank itself?
Personally, no. I think across all industries, and this is where APIs have become so crucial as well, is that the customer relationship management has become the core of, it's the spine of a business now. So that the more information you have about the customer and their journey through your business, what products they use, and from everything from initial awareness through to all of the transitions of their engagement with products and all that sort of thing. That's become the crucial spine around which you build and you can organise your business and structure your even the IT architecture. So out of that, I think that will be where that's where banks will need to maintain.
But there is a lot of ongoing stuff already, and that for instance we do. So things like customer supports their customer. So the community-based approach, that's already up and running. So we have some cases where we have very expert customers and they want to provide a specific answer to somebody, but they do it, but in an ecosystem that we maintain and we put available to them, that they do it. So it's not us necessarily. So we provide the support structure that it actually happens and it's moderated and it works well. But people do it among themselves, but within a frame that's defined by the bank, and that's actually working very well. We see, for instance, a lot of call deflection or email deflection because we have some power users that actually do the service for us, and they actually answer very tricky questions because they're so into some of our brands and some of the relations that they are actually able to. So, well, if you don't know how to open a foreign account in this country, I explain you the process, and this is really working well.
What I would add is that there will no more be a monopolistic approach. In the ecosystem, there will not be somebody dealing this part of the value chain and another body dealing another part. It will be more fragmented than that.
We have time for one more question. Else, I take it. Yeah. How long do you think? Just for the.
Sorry.
How long do you think it will take for open banking to be the pervasive way that banking is undertaking, as open banking as we've been talking about it here? How many years are we away from that being the pervasive way of doing banking?
I'm going to say 5, because PSD2 is introduced in 2018. So I think that the leaders of the packs are already moving there. Like as we've heard over the last couple of days, and some in the audience here, we know, they're the leaders. That's why we call them leaders. Sort of thing. They're going to be doing it. They are already moving there and seeing the opportunity. I think there's still then 2/3 of the banking. Of the banking market that's going to be much slower and is only going to take it up when they have to, and then in 4.5 years when the leaders are having such traction with their competition gains, then that last 6 months and the laggards will be like, let's get into this game.
That's a good answer.
So you bet for 5 years too, Antonio?
I think that's a fair horizon of time to see, begin to see meaningful impact. And then again, some people will be very late, others be very fast, but I think that's kind of the right window where you're going to see tangible things that people can to relate to the decisions they took. Yeah, that's.
Yeah, I think that's a fair assumption. I think again, open banking will be different maturity, so it will obviously start before that, but maybe on a smaller scale. And there will be an acceleration then. So that's, but 5 years is, yeah.
So panelists who agree, let's end on that. Thank you very much. Oh, you had a question? Yeah, okay, let's, I hope they will agree too.
Yeah.
Is that also when the customer is ready? So to be willing to share the information, that kind of stuff.
Yeah, mostly I think actually the customer's probably ready coming now or in the next year or two already, sort of thing. So there's some, there's some concerns about the security and that sort of the trust sort of stuff, but but I don't think that's the hold up. I think the customers are there. Any other dispute?
Yeah, the Snapchat generation. The Snapchat generation is here.
RNG was 2 years ago, so then there was a lot of pushback by customers sharing data. So there's still a lot of things need to be changed on that side as well.
Yeah. Cool. Thank you.
You agree? Thank you very much. Thank you.
Thank you.
Thank you very much.